morning, good afternoon, good evening, traders from across the globe, and welcome to the 1862nd edition of Short-Term Trading Live with Oscar Carboni. Traders, good evening. Luckily, I don't have to come up with any trading this evening because guess what? Tomorrow is Thanksgiving here in the U.S. Thank you for the people who have been in my trading room for the last few months and weeks and years, I should say. We've had a blast. You know, before I get into everything on this video, something that I just wanted to say. Today in my trading room, luckily, it's been a rare occasion. We were in two trades that were both going against us. And you know what? You traders in my trading room, you have matured in ways I would never have dreamed possible just a couple of years ago. There was no panic in the room today. It was nothing but traders speaking nicely, dealing with the market going against them. And guess what happens towards the end of the day? Comes racing all the way back, and we only have a 4-point loss in the S&P. Russell got stopped out, my bad, right on the high tick of the day. I left my trade in Russell for everybody. Our stops got hit right at the high. And then it came all the way back down where we could have only had a small loss. But that's the way this works. Point being, no one in the room panicked. So congratulations to all of you. You are really maturing. Thank you for your behavior today when markets weren't going in our favor. All right, so this video, the 1862nd edition of these educational videos coming at you on a Wednesday night for Trading Turkey Day, Thursday, 11, which would be 22, 2018, but this video is being filmed on 11/21. Traders, remember that anything in the industry or anything in the arena where trading takes place is extremely risky. You have to know this these days. It's been so volatile. The risk is like this, and it's like this, and it's like this. You need to know. Stay away from the markets. If you don't know what you're doing, do not trade without stops. Make sure the stops are wide enough to deal with the volatility. And come on down to livewithoscar.com and allow me to help steer you correctly during these rough and tumble days. So, what is on my board? Markets are closed, sort of, for the next 2 days. So, you know, they're kind of open for a shortened session on Thursday night into Friday. They close at 12 noon on Friday. I'm not getting involved in any of that. I'm going to hang out and enjoy my Thanksgiving. I hope you do the same. Europeans, Asians, traders from around the world, wherever you're from, you might not be celebrating Thanksgiving, but go enjoy yourselves. Take 2 days off. Let's come back on Sunday night into Monday and do this again. Smell the roses, kiss your kids, have some fun. The markets aren't going anywhere. They'll be here on Sunday night or Monday when you get back. So if you're not celebrating Thanksgiving, if you're not from the U.S., go enjoy yourselves anyway. I will. I mean, come on. All right, so bear flags did force the indices to drop. If you remember the video I showed you right before this one, it was actually a class, a live class I held at my site, and I showed you a bunch of charts depicting bear flags, telling you they are bear flags. Some of them are F flags, some of them aren't perfect, but they are bear flags that did force the indices to drop. But I want to tell you something. Today they rallied a little. One-day rally does not constitute a return to risk-on behavior. I'm sorry. It was a hollow rally today. It rallied up a little bit. I don't care if it rallies one more day. I don't see anything that brings us back to risk-on behavior yet. News-wise, I think you can get some risk-on behavior again once we have our meeting on the 30th when China and the U.S. discuss trade. If an agreement, which I think will happen, comes through, risk on should come back, but for now, that's some time from now. That's 10 days away. That might as well be 10 years in traders' terms, right? If you're a day trader. For now, I don't see any reason to go back to risk on behavior. I am very suspect of that rally that we've seen on Wednesday, and let's see how this pans out. We'll do our homework on Sunday night for Trading Monday and see where that goes because we're closed from Thursday forward. Crude targets remain valid. I showed you crude targets, I don't know, 10 days ago, 15 days ago. We've hit 2 out of those 3 targets miraculously. Crude's got lower targets to go. I will show those to you. And then there is this. My opinion, 37 years I have been watching these markets. I study more than anyone I've ever met. I watch the markets more than anyone I've ever known. Look at my fingers. I work my fingers to the bones watching these markets, trading, analyzing, anything I can do to stay on them. And all of that 37 years experience, and you know, many of my years, I was on the trading floor, trained by the pros. I worked my whole life down there, as most of my adult life. I was trained by John Murphy. I went to New York Institute of Finance. I've got followers all over the planet that have been watching me since 2006, and we've blown these markets up with the Omni. I have a reason to say I'm a bit of an authority on this, right? 37 years. Here's what I got to say. The Fed and interest rates have reached equilibrium. They do not need to do anything else for some time. That doesn't mean they're not going to raise rates at the next meeting in December. I am telling you, we have reached equilibrium. We've gotten to the point they wanted to get to. What would make me say that? You've all been watching. We've had the Fed raising rates for years now. Since 2 Decembers ago, the Fed started raising rates. And every time they raised rates, the market would move a little up, a little down that day, and we'd go back to work the next day like nothing ever happened. Did you see what happened with the last rate move? The whole entire planet's economic markets went. That tells you, that tells me, that tells the Fed, that rate hike, well, that did something. That took a dramatic effect on the world's economies. I am telling you, Fed, if you haven't recognized it, you're at equilibrium. You don't need to do anything right now. Sit tight. I know you're probably raising rates in December. After that raise, sit tight. See where this goes. Now, if you don't think you're at equilibrium, remember, the last dozen or 10 rate raises, 8 of them, we'd seen almost nothing happen to the markets, right? It meant almost nothing, like it didn't even happen. Smooth sailing, markets went straight up. Look at what happened at the last rate movement. I'm going to show you again. Everything went like this. It's still reeling. I am telling you, rates are there. We don't need to touch rates anymore. After 37 years, I'll bet you I know this better than most of the people who are making the decisions on rates. Why? Most of them probably don't even have 37 years of this sort of experience watching markets. I am here to say we're at equilibrium with our interest rates. They don't need to do anything anymore. They will probably in December, and then you mark my words, they'll see it too. They're going to back right off and do nothing for a while. So that's my take. Interest rates are where they need to be. They don't need to go any higher. They don't need to go lower. They need to stay here right now. My opinion, the Fed will do whatever it wants. Just hopefully they're listening to me, because I've been paying attention for a long time, kids. We're at equilibrium in the interest rates and the Fed. We'll see where that goes. All right, so I've got some very interesting charts I want to show you before this holiday weekend. No trading on Thursday. Thanksgiving. We're all going to get fatter and enjoy ourselves. I'm not going to trade on Friday. We're going to pick this up again on Sunday. However, I want to show you some charts because we did a video, as I mentioned, that class just a couple of days ago, and I want to show you a continuation of the charts from that class so you're ready for what happens on Sunday night going forward. With no further ado, let's go look at some charts. So traders, as we talked about, bear flag in the last video I showed you, I said look at all of these bear flags. That's what they mean to me anyway. We should drop. So here, you had your little inverted head and shoulders build and the bear flag. That does not mean that the inverted head and shoulders will not end up bullish once the report comes out about China, but that's in the future. For top day trading, here was the flag. We expected it to drop. Here's where it was. And this is what happened. How about that, huh? Now, once again, remember, this could very well be an inverted head and shoulders, right? We're gonna find out if this is an inverted head and shoulders. And if, well, this is a head and shoulders, but we have an inverted one from the other end. I'm sorry, I messed that up on you kids. It's the inverted head and shoulders. If that's the case, this is supposed to be a head test right here, and we're supposed to hold and move higher. But I don't know. I don't know about that. Let me show you the rest of this. Nasdaq. We had a flag. Once again, you've got the inverted head and shoulders. Circle, circle, circle. But then this happened. You built that bear flag. Instead of having the right shoulder over here, you drop down here. So I said, let's forget this inverted thing for now. Let's look at this as a bear flag. Showed it to you in the video a couple of nights ago. This is where we were. And this is what happened. How about that for a drop? Talk about flags paying off, huh? And then we discussed the emini S&P, and I said, even that little thing right there is a flag. That's where we were. And this is what happened. Once again, you might as well clap for that. Fantastic analysis. So now we're going to look at something else. If you recall, I said there was only one possible shining light. The only thing that could possibly be bullish, and I don't think it is, was the Dow chart. Remember, we're reliving a video from 3 nights ago. And I said this could possibly be a bull flag. That's the only thing that could be bullish. However, epic failures at the 200 ball moving average are not going to help any bull flag case. So anyway, I showed this to you and said, let's pretend this is a bull flag. And we put the bull flag on there. And this is what happened since. Not a bull flag. You dropped right down to here. This does not look bullish to me. I don't think that was a flag. I think that was just a formation. But once again, you've got this inverted head and shoulders thing going on, right? Maybe, just maybe, that is the longer-term bullish signal that will show up once we have the China-US deal. I think it's going to happen soon. I think that's what the inverted head and shoulders is showing us. But for now, top day, we are bearish, and we look like we will be heading down again next week. We'll take it one day at a time. We're not doing any trading till we do more analysis Sunday night. I'm showing you what happened and where we stand as of Wednesday afternoon. Then there's crude oil. Traders, this chart, amazingly, we had a call for 81. The market was trading at 66.75, I believe, right around there. We had a call for 81, and it rallied, but it only made it to 77. Once we topped out at 77 and broke to 75, Omni gave us another projection of 58. Then it added 58, 53, and 46.35. And look what happened. We broke the 200. Now, that projection was made when we were up here, kids. We broke, made a bear flag, broke it, made a bear flag, went into an F flag, cracked it, hit the 5,800 target. Oh my, is that not insane? If that wasn't good enough, we break again and we hit the 53 target. Bingo, bango, they've both been hit. How about that for an Omni call? And target 46.35 remains valid. It won't even fit on the chart. It's so much lower it won't even fit in the video right now. But the target remains valid. I will rework those targets over this weekend, and Sunday night into Monday I may have a new target down here. We'll take it as it develops after the analysis is done. For now, call that your target. Bingo, bingo, why not see the next one? Traders, that's my presentation for you. I hope this will help you with the analysis moving forward on Sunday night into Monday next week. So, traders, you've seen the charts, you've seen the turkey, you've got my opinion, you know where I think this is going to go. So, as far as the indices, the flags worked, that's done. We'll do new analysis Sunday night for Monday. However, I don't think the one-day rally that we've seen on Wednesday constitute risk-on behavior. You've heard that. Let's see what happens next week. Crude targets remain valid. Remember what I said about interest rates? Okay, we're there. We are there. Stop messing with the rates. All right, traders, listen. I've got one open ticket for my OmniCamp. OmniCamp is this February. I've got one ticket open. If you'd like to grab that ticket, then guess what? If you contact me and I qualify you for a seat, once you're locked in, then I can ask all 5 of you Omniacs if you want to make the camp at a different date. We can move it sooner. Maybe get it done in January. Who knows? So it's exciting. I don't mind moving the date. For now, the date is fixed in Feb. Don't sweat that. But once we get one more camper to come online, maybe I could ask all 5 of you if you just want to move it up sooner. We'll see how that goes. One ticket left. OmniCamp, 4 days here in Las Vegas, where I will teach you the art of Oscar's market navigational indicator, the Omni. I'll teach that to you. You will be able to pull the same trades that I call when I help traders all over the planet. If you'd like to learn that, There's one seat left for my OmniCamp. Come to livewithoscar.com, fill out your OmniCamp application, and I'll personally call you to qualify you for a seat. Traders, happy Thanksgiving, happy holiday, enjoy your time off. I cannot wait for a few days off. I'm not looking at markets. I don't care where they go on this little session from Thursday night to Friday. I'm not looking. I don't care. I don't want to see it. I don't want to hear it. I don't want nothing but turkey in my belly. And I am going to stay away from markets till Sunday night until Monday. We'll pick it up there. Traders, thank you so much for tuning into my channel. Thank you for being YouTube fans. Please, please subscribe to the channel so that you know when a video is coming out next. And remember, keep your emotions out of trading. One of the best things you can do to help keep those emotions at bay, and believe me, I know it's not easy, but try this. Say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stop. I got you in. Emotions are. I got you again. Twice I got them. I baited them good. I'll see you all at the site. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.